Kevin Walkush, one stock you like in the Jensen Quality Growth Fund is Becton Dickinson. Now, the syringe maker stock was on fire until August when I guess it was a third quarter earnings report and Wall Street kind of cooled on the company. But can they get that fire back?
Oh, absolutely. I think fundamentally we view the company's financials are completely intact. The company still has maintained its strong competitive advantages. Last year, they did a big acquisition of CareFusion, which allowed them to move up the value chain from just needles and syringes to pumps. So I think the company really enjoyed strong potential synergies from that. And I think there's a little bit of a break in healthcare, I think, right now, that they sort of got caught in the downdraft. But again, we think fundamentals are preserved. We think the company has a very good long-term opportunity.
All right, you're also bullish on Accenture.
Yes.
And that stock's up over 12% so far this year. Pays a nice, I think, 2.2% dividend yield. So it seems like all the cylinders are firing there. But what takes it higher?
Honestly, fundamentals. All last year, the company did really well in a currency-challenged environment globally. Fundamentally, the company raised guidance 3 times last year. So the company's really firing well fundamentally. So what can take it higher? I think continued trends and demands for their services. Usually when things get a little bit rough, companies want to figure out how to get better. Them being the world's largest business services company benefits from that demand. We also think long-term trends in tech is very strong for them, as well as demands for business process outsourcing.
All right, and you're also a fan of Microsoft. Here's my question about Microsoft. Can it finally break through $50 a share?
Absolutely. It's just a matter of time. But we think fundamentally the company is definitely going in the right direction. We do like the leadership change to Satya Nadella over a year ago. He's really reinvigorated the company, in our opinion, has really focused the company. And then from a business standpoint, we like the areas that the company's in. It's still, its fundamental strengths in operating systems and office productivity suites are still strong. As a cloud company, it's one of the leading cloud companies on the market. And so we're really happy with the direction that the company's going.
And then finally, you're a fan of 3M. This stock's down over 10% so far this year. I know a lot of it is due to currency woes, but is that all of it? Is there more to the story?
I think generally I think it is a currency woe or currency concern. I think they've sort of gotten caught a little bit in the downdraft that industrials have sort of had to endure this year, but less so. And I think the strength and the diversity of the business, not only serving industrials, but also having a consumer component and a healthcare component, has actually helped mitigate some of the losses that their peers have realized this year.
All right, well, thanks a lot, Kevin.
Great, thank you.
And thank you for watching The Street.